Okay, well, I don't want to speak too soon, but there's an old adage, sell in May and go away. I don't know if that's going to play out. The May has definitely begun on a bit of a back foot. I mean, at least this morning looks like it's going to be a weak one, but then we'll take it as it comes. SGX Nifty is now down almost 85 odd points. But our entire team is joining in to tell us about all the stocks that you need to watch out for as we kickstart trade this morning. So let's get straight to it. Nigel, Tata Steel, that was a good one.
Well, Tata Steel yesterday ended at the high point of the day, but the numbers look very, very good. So expecting the stock to outperform today, at least in the initial part of the trading session. The revenues, the profitability, the margins, as well as the profit number, all of them much better than what the street was working with. So on the basic numbers, it's a beat. But you look at the geographic breakup, right? And India, much better. We're working with around 13,500 odd. It came in at around 16,700 rupees. So input costs clearly cooled off. Some operating leverage played out, and they have managed to control their costs. So that's why that is a big beat out there. Europe, well, the loss was, was less than expected. It's a negative $94 per ton. That compares with the negative $107 per ton that we were factoring in. So lower losses at Europe. And the Thailand business, well, it's a smaller part of their business, but some improvement is what we are seeing over the last few quarters, so close to around 2,000 rupees per ton. The cherry on the cake is that they reduced their net debt number by close to around 3,900 crores, which is a positive. And they've also given in some dividends. So the stock opens up in the green, but just to caution our viewers that steel prices in the last 25 to 30 days have declined in China. So you're expecting some bit of pressure on prices here in May as well. So just keep that in mind. But for starters, it opens up in the green. But to understand more about the company, we'll be speaking to Tata Steel's MD and CEO, Mr. Narendran, at around 1:35 p.m. to discuss the earnings and the outlook. It's going to be a cracking conversation, so make sure you tune into this one.
So Tata Steel disco will do disco, Nigel?
It did the disco yesterday. Today, it's the music will be playing. It'll dance initially, but
you'll start with that disco.
I used it yesterday, so I said I'll take it a little easy.
Right. Well,
You do the disco along with disco. That's the question.
That's at 1:30.
That's at 1:30, I'd say. And it's going to be important because it's before the analyst call. So we'll be bringing in the first take from the management. So it's going to be important.
All right. That's Tata Steel for you. Now, Abhishek is standing by with Central Bank and Bank of Baroda numbers. Abhishek, morning.
Morning. So Go Ahead has filed for insolvency. The stock in focus would be Bombay Bumrah, Central Bank of India and Bank of Baroda, who have exposure over there. So Bombay Burma has an exposure of about 318 crore of debt, and they also have a 36.5% stake. So lenders to Go First are Central Bank of India, who have an exposure of about 1,560 crores. Axis Bank has a small exposure of about rupees 30 crores. IDBI Bank has an exposure of nearly about 59 crores, and Deutsche Bank has an exposure of 1,320 crores. So Bank of Baroda also has an exposure of more than 1,400 crores. The source being equity, ratings. So these stocks will be under pressure. Back to you.
Okay, thanks a lot for that. So there is also, the entire aviation space that will be in focus as Go First has now filed for bankruptcy. That could benefit Indigo in many ways. So we're talking about the stock perhaps being in the green this morning. Go First insolvency could remove 9% of the domestic supply in the aviation sector, and many brokerages have written on this. So Credit Suisse put out a note where they say that Go First insolvency can help Indigo improve their market share, can help them with stronger yields in a capacity-constrained environment. There can be increasing leverage with the global OEMs, and a lot of the lessors may now be keen to allocate some of the Go First aircrafts to Indigo because they have the similar fleet type. Now, remember, this is a sector which is booming at the moment. A lot of global investors are investing in this space. So the fact that one big player is now out of action gives the others, a big chance to gain a lot of either fleet or the investments. Also, Credit Suisse has an outperform with a target price of 24.50. BofA Securities has a buy with a target price of 2,700. There's also the incremental positive because of a fall in crude. Crude prices are down about 5%, so that will benefit them operationally.
Well, that's right. Sonia, in the final hour of trade yesterday, as this news broke, we had alerted our viewers that it could potentially be a beneficiary. And if we pull up the intraday chart, well, the stock ended virtually at the high point of the day as well. InterGlobe Aviation is the stock we're talking about. I think we can, focus on the lenders as well, to this group. Abhishek, I think, is joining in to run us through, a list of further analysis. No, I think let's focus on Ambuja Cements first up. The results out there were much better than what the street was expecting, particularly on the EBITDA front. EBITDA came in at around 790 crores odd. That compares with around 750 crores that we were working with. Margins as well, much better. Why were they better? One is operating leverage played out. The volumes came in much better at around 8.1 million tons, which was much better than anyone on the street was working with. And also the margin improvement is operating leverage and lower cost. Two costs, one is other expenses as well as power and fuel costs. Both of them were down in the mid-teens. The guidance that the management has given is very, very ambitious, but let's see whether or not they can get there. They're looking at doubling their capacity in the next few years, and the EBITDA they're saying for this year itself will improve by around 300 to around 400 rupees per ton. So the stock opens up in the green, but let's see where it goes from there.
Okay, that's on Ambuja Cements, but let's get Abhishek back on board. He's tracking M&M Financial, Spandana Spurti and Fino Payments Banks. A lot of data has come through. Abhishek, over to you.
M&M Finance has given the monthly update in terms of the business momentum that they had in April. Disbursements are up 39% YOY, but a decline of 32.6% month on month. So, the year-end figure has actually been played out over here. Collection efficiency has also dipped, to about 92%, which is the lowest that you are seeing in last 6 months. It is versus 105% that they had in the month of March. Asset book or the overall business momentum remains steady, growing at 1.9% on a month-on-month basis. Asset quality, they say, that has remained range-bound to Q4 numbers. Now, typically, at times, they do give gross NPA and net NPA number, and this time around, they have not given. Fino Payment Bank, the Q4 momentum in PNL was pretty strong. Total income being up 13.5% YOY and about 3% sequentially. The EBITDA, that saw us, sharp jump by almost 46% YOY and about 10.5% sequentially. So you saw EBITDA margin expanding both YOY and quarter-on-quarter to about 13.3%. PAT also grew robustly by 25% YOY and about 16.2% sequentially. So you are seeing net profit margin also expand on a YOY and quarter-on-quarter basis. Spandana Spurti, the disbursal momentum was pretty strong, growing at 120% YOY and about close to 30% sequentially. So you had AUM growth as well at 29.4% YOY and 24.2% sequentially. Disbursal to AUM ratio is now moving towards like an HFC with a longer duration portfolio. So it's now at 54.3% versus 45% that you had in previous quarter and around 19-20% that you had in Q2, which is typical for MFI portfolio. Gross NPA has improved given the fact that they have sold NPAs to ARC. Gross NPA ratio is down to 2.07% when compared to 5.3% in the previous quarter. Net interest income, robust growth over there, 104% YOY and 48% sequentially. That led to strong profitability, which grew by more than 68% on a quarter-on-quarter basis. Back to you.
All right, thanks a lot for that. Vivek is also standing by to give us a couple of more stocks that are in the news. Vivek, over to you.
Well, good morning. A couple of stocks on the radar. First on our list is Coforge. The consistent supply overhang continues to persist as far as Coforge is concerned. Yesterday, too, in a large block deal, Bearings P actually exited 3.5% out of the total 30.16% stake that they held in the company. So Bearing Private Equity actually had almost 70% stake in the company at the end of September 2020, which has now fallen quite significantly to 26.5%. Now, one of the large buyers in yesterday's block deal was Motilal Oswal, the multi-cap fund. They picked up almost 0.8% stake. The other stock on our radar is Cummins India. Now, the company, the Indian entity, will be declaring its results on May 24th. Yesterday, Cummins Inc., the global entity, actually reported the Q1 CY23 results. A strong read-through as far as the Indian arm is concerned. The India sales, including the JVs that they have in India, increased almost 21% on a year-on-year basis. And along with that, the key read-through is the fact that they reported a 30% growth as far as the domestic power generation business is concerned. So I'll also remember, while Cummins Inc. has increased the guidance for the global entity, the India guidance remained unchanged, but Cummins India definitely will remain in focus today.
All right, thanks a lot to our entire team for helping us prep for the day. Here's a quick recap of all the stocks with positive news flow. There's Tata Steel, Ambuja Cements, Spandana Spurti, Fino Payments Bank, Cummins and InterGlobe Aviation. While stocks with negative news flow, there's Central Bank of India, Bank of Baroda, M&M Financial and Coforge. But the other big global headline is the fall in crude prices. Manisha Gupta joins in for a roundup of all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, a 5-week lows on the crude oil prices with 5% of decline in the overnight market, and the last month has seen nearly 12% of a fall now come in for the crude oil prices. Not just crude, gasoline, heating oil also fell by more than 5% in the overnight market. Well, we have seen weak economic data come in from US and China, and the US politicians discussing ways to avoid debt default is something that has broken the sentiment yet again. In the and the other news, you also are looking at Iran crude output surpassing 3 million barrels per day, much higher than the allocated quota, and that means more supplies coming into the market and demand not matching up. All eyes clearly on the US Fed rate decision that comes in tonight and the ECB meeting that's tomorrow. So ahead of that, there is choppiness coming in for the other metals also, which have started the day on a decline. The only thing that I see trading in green clearly is the gold prices, trading much higher, above $2,000 per ounce. We've seen nearly $40 per ounce of a jump up come in last 24 hours. So this is the only place that you have buying coming in.
All right, Manisha, thank you very much for that. That's commodities and gold in focus. Well, we'll take a quick commercial break here. Devin Chokshi of KR Chokshi Securities will join in to talk to us about individual stocks, lots of earnings we'll need to get by. And we'll have the management of Home First Finance. The company continues to grow at a rapid pace. Manoj Vishwanathan, Managing Director and CEO of the company, joins in for a quick conversation there as well. Stay with us.